Well, good morning, Joginder Rana here. The topic for our discussion today is innovations in motor insurance. Innovations in motor insurance. The vehicle owners without insurance need to be cautious on the streets, as the automatic number plate recognition, that is called ANPR cameras, in Bihar's smart cities Patna, Muzaffarpur, Bhagalpur, Bihar Sharif will automatically detect and issue fines for the offenders. Vehicles without insurance would be fined once per day, with a 1 day grace period for each challan payment. So following this period, subsequent violations will incur additional e-challans as penalties. Transport Secretary said that vehicles with outdated insurance certificates are subject to an e-challan under Section 196 of the Motor Vehicle Act 1988. Previously, automatic fines were issued for vehicles without insurance through e-detection system at toll plazas. Additional fines were issued using handheld vehicles. So, all vehicle owners must have at least third-party insurance. Having third-party insurance provides financial security and assists accident victims. There is a penalty for not having vehicle insurance, and in the event of an accident, there is a provision for covering medical expenses and compensation of at least ₹5 lakh in case of death. So the Transport Secretary urged people to act as responsible citizens by getting insurance for their vehicles and ensuring the safety of others on the road. Third-party insurance provides financial protection to the policyholders in case of an accident or damage to someone else's property. It also shields the policyholders from lawsuits filed by the third parties and reassures the policyholders that they are covered in the event of an accident. Vehicle owners with insurance will get protection of their assets from being seized in a lawsuit. And it also helps the policyholder receives compensation for damages or losses incurred. Authorities were planning to link unpaid challans on a vehicle to higher premiums paid for the vehicle's insurance. If an individual carries forward more than 2 unpaid or pending challans from the previous financial year, they might be pushed to pay higher premiums towards their vehicle's insurance policy next year. Similarly, if they rack up more than 3 traffic violations, like driving on a footpath or driving vehicles that are over 10 years old in the case of petrol, or 15 years old in the case of diesel, or more in a single year, the license could be confiscated for a minimum of 3 months. The consequence could also include cancellation of the vehicle's registration till the fine imposed is done away with. Moreover, if there is no action by the person on the challan within 30 days of its generation, it would automatically be considered an admission of guilt on the part of the vehicle's owner. So the new financial year has kick-started this month, and people are wondering whether they will have to pay higher motor insurance premiums this time around if have more than 2 pending unpaid challans from the previous financial year. So will all these rules be actively enforced starting this financial year? The present proposal has not been implemented yet, and it still is in the draft stage. Currently in draft stage, no timeline on implementation. So tracking challan status post policy issuance poses practical and systematic challenges. As such, it would require a secure and continuous data sharing mechanism between the Ministry of Road Transport, the State Traffic Department, and motor vehicle insurers. So, implementing this would not be easy since this would require multiple privacy and compliance concerns to be addressed under the Digital Personal Data Protection Act. But the primary obstacle lies in the intricate task of unifying various state-level databases, a challenge further amplified by the requirement of India's Data Protection Act says. Supreme Court of India says, an advocate of Supreme Court of India. So for insurers to effectively implement this direct and real-time access to government e-challan system is essential. Scalability will depend on overcoming these integration challenges, ensuring strict data privacy and committing to substantial infrastructure investments. Subsequent infrastructure investments. The proposed rule to suspend driving license for non-payment of traffic e-challans within 3 months has not yet been fully implemented. However, multiple experts say that the integration of e-challan system with insurance premiums is under phased implementation in multiple states in India. States like Delhi are even piloting real-time data sharing between traffic police and insurers via centralized platforms, for example, Parivahan portal. Now, the proposed rule suggests a tiered premium model where 2 pending challans in a financial year trigger a 10 to 20% premium hike. Others, like Alag, expect that insurance companies might employ a point-based system wherein each valid uncontested challan contributes to a score that determines the premium rate. Our experts anticipate that the premium pricing will largely be done via a telematics-based pricing mechanism. So insurers may use traffic violation history, for example, more than 2 pending challans, as a metric to calculate risk-based premiums. Notably, telematics-based insurance, also known more commonly as usage-based or pay-as-you-drive insurance, lets policyholders pay premium in proportion to the amount of time they drive the vehicle. So with a policy term of 1 year, insurers measures the distance covered by your car either by the vehicle's odometer reading or via an app that the policyholder has to install. So specifically for this, it is also available as a kilometer benefit add-on cover with your existing motor insurance policy. Since it so comprehensively analyzes the driver's behavior and usage patterns, insurance companies generally reward drivers perceived as safe with lower premiums payable, while risky drivers might be subject to higher premiums. So the plan to implement such a punitive measure against vehicle owners is not without practical challenges. Many times challans are erroneously or wrongly generated, prompting drivers to contest them in lok adalats or virtual courts. However, if such challans are linked to premium calculations, it could potentially inflate the premium payable even when the policyholder is not at fault. The solution for this could be offered to vehicle owners. The policyholder will have no dispute and resolve the challan before the policy term begins or during renewals. And in the event the issue subsists or is not resolved timely, there is a risk of unjustified premium hike. In case the proposal for enhancement and insurance premium happens on account of multiple pending challans, premium calculations would likely be adjusted once the errors are rectified. But the exact method for handling this remains unclear. It might involve providing evidence of wrong charges or submitting appeals to authorities to correct the record before insurance claims are finalized. This should become clear if and when the amendment provisions are enforced. The post-verification invalid challenge triggers refund. Regulator like IRDAI should mandate transparent dispute mechanism requiring insurers to validate challan legitimacy before finalizing premiums, ensuring fairness. So, the national, we can say, insurers are unhappy over the delayed motor TP rate announcement for 25-26 because the general insurers are concerned over the delayed notification of the revised motor third-party premium rates for 25-26. So insurers are collecting premiums announced last year. But the new rates turn out to be higher, insurance risk incurring a loss, whereas if they are lower, it will be a loss for customers who have already purchased the cover. The National Consumer Dispute Redressal Commission has ruled that an insurance claim may be lawfully denied if the driver of the insured vehicle did not hold a valid driving license at the time of the accident. In the case under review, the complainant's vehicle insured with National Insurance Company was involved in an accident during the policy period. The vehicle was completely damaged and the driver died. So the insurers rejected the claim on the ground that the driver's license had expired. The District Commission in Guna, Madhya Pradesh had directed the insurers to pay 75% of the claim amount. However, the State Commission overturned this decision and the NCDRC upheld the State Commission's ruling, stating that not possessing a valid driving license constituted a breach of policy terms. So while the Motor Vehicle Act 2019 allows a 30-day grace period for license renewal, driving with an expired license, even during the grace period, is not permitted. So drivers must renew their license immediately once it expires and refrain from driving until the process is complete. In case of an accident involving an expired license, insurers typically deny coverage. So while there is no fixed legal timeline for reporting an accident, delays can affect claim approval. Insurers may seek reasons for the delay before processing the claim. But it is best to inform them as early as possible. So using a private vehicle for commercial purposes is another breach. This violates the limitations as to use clause under the policy. Such uses can lead to claim rejection. And then some insurers may allow up to 7 days, but the sooner you report, the better. Because customers experience and claim that informing the insurer within 24 to 40 hours is ideal. To reduce the risk of claim rejection, policyholders must ensure that all required documents are accurately submitted at the time of purchase, disclose relevant information honestly, understand the policy terms, and declare the correct no-claim bonus and insured declared value. So further, to disclose modifications can result in rejection or limited coverage if the insurer was not informed. Modified parts may not be covered. So the license must correspond to the vehicle category. A person holding a light motor vehicle license cannot legally operate a truck or bus. So driving with an incorrect license type can also invalidate a claim. If intoxication is established, the insurer is likely to deny the claim. These are the exclusions of the policy. Thank you very much.